Hey everyone, and welcome back to the channel. I am Craige Campbell, your host from Good Money Skills, and today we're going to tackle the topic of credit. That's right, credit. Over 30% of Americans have a FICO score, a credit score of less than 601. That means by FICO standards, that's 1/3 of people that have a credit score that is below average. That means there's added pressure in terms of getting loans for just regular living, getting a car, getting a mortgage, or just being approved for regular loans. And the numbers aren't very different in Canada. That's putting a lot of stress on a lot of people. But hope is not lost. There is a way, and several ways, if you will, to improve your credit score and getting that number into the 700s, even the 800s. It's plausible. Stick with me here. Now I have a question for you, maybe two questions. Are you struggling with a low credit score? Are you trying to build up your credit, but the process seems slower than you think it really should be? Well, trust me, you're not alone. Today, I'm going to share some tips to help you improve your credit score fast. But firstly, let's understand the basics. Your credit score is influenced by several factors. Now, the most significant piece is your payment history, making up 35% of your score. And this is why it's absolutely vital to always pay your bills on time. And even one late payment can hurt your score. The best way to ensure this happens is to set automatic payments or reminders in your phone or your calendar to make you stay on track. This removes the guesswork or relying on your memory each month. Next, in terms of boosting your credit, is your credit utilization. This counts for 30% of your score. So if you have, let's say, a $10,000 limit on your credit card, you should aim to use less than 30% of your available credit. So using this example again of $10,000, you should have no more than $3,000 owing on your credit card at any given time. You already know that your goal is to pay off your credit card each and every month. I know, easier said than done, right? You want to try to keep the balance though less than your 30% threshold. So here's a little hack. If you can get approved, you can also request a higher credit limit on your card. So using the $10,000 limit, if you say owed $4,000 on your credit card, you've already passed that threshold of that 30%. But if you were to ask for an increase on your credit card of $10,000 to say $12,000, now you're going to be within that 30% credit utilization because you're at $12,000 and you have a $4,000 balance. However, if you get an increase on your credit limit, this is not an excuse to start spending and charging more on your card to fill up that gap, that new space you now have because you have a higher credit limit. You still have to stay within your means, stay within your budget. Another factor that adds to your credit score is your length of your credit history, which makes up 15% of your score. You see, banks and lenders, they want to see if you are new to the credit game or if you have history on accounts and you're paying them on time. This is why it's so important to keep old accounts open, even if you're not really using them on a regular basis. It shows your history. It's almost like you have to prove your worth to some of these banks. They want to see if you're able and have been able to pay your accounts on time in the past. And that will determine if they're going to lend money to you now in the present. If you're new to building your credit, consider taking out a small personal loan. This can act as a credit builder loan and actually build some history. Make your payments timely and make sure you pay it off after at least a year. If you pay it off too quickly, it's not going to give you that history that lenders are looking for. And then repeat if necessary. An additional tip is to get a secured credit card to start building your credit. You simply send the credit card company an amount, let's say $500 or $1,000, and that becomes your credit limit. Meanwhile, the amount that you've given them, that can collect interest over time. And so when you're ready to move forward to a standard credit card, you can get that money back with interest. So a secured card can really be helpful for those just establishing credit or for people that are trying to build up their credit after a consumer proposal or bankruptcy. It's a good idea to report your rent and utility payments on the credit card bureaus as well, because this can also help establish your credit history. Don't forget to mix up your credit. It doesn't make sense to have like 5 different credit cards. I mean, do you really need 5 different credit cards in the first place? So mix it up. Get accounts like a personal loan, a line of credit, auto loan, right? Make sure to do so only as you can manage them correctly. But different types of credit make up 10% of your overall credit score. So it's always a good idea to have different kinds of credit in your account. Okay? Now, for the last 10% of your credit score, it's made up of new credit. And this is why you should be cautious about applying for new credit too often. Each application can slightly lower your score. You may have seen this already, but it's only temporary. So there's one more topic I want to get into, and it's a little controversial for some people. And that is, if you have poor credit, you can open up a joint account with someone who has good credit, which can ultimately boost the credit for the person, you in this case, that has the lower credit score. But there's 2 things to consider, and they're major things, and you got to listen up on this one. It's really important. First, for the person with the good credit, once the co-signed has shown improvement on their credit, you probably maybe had a conversation, had an agreed upon number. Now you need to request a notice of disassociation and separate your credit files from theirs. Don't forget this step. Co-signing for someone can really help boost their credit, but you have to make sure to take the time to disassociate yourself from their file once they get to that approved number, okay? Don't forget to do this. Here's the second part. If you have low credit and get someone to co-sign for you and you are not responsible, not only can it wreck your credit, it can wreck their credit, along with probably your relationship. And for this reason, I really advise against co-signers unless there's a close established relationship. I'm talking like a spouse or a child. They have an understanding of the consequences if they miss even one payment. In these kinds of close relationships, you can always pull the plug as well if things start to get kind of off track, let's say. Otherwise, I strongly advise against doing any kind of co-signing for a friend, a new relationship, a distant cousin, a friend from high school. Seriously, folks, don't do it. It's just not worth it, okay? So, improving your credit score, it takes time. It takes consistent effort. Focus on making timely payments, managing your credit utilization, building a solid credit history. All of these things are vitally important. Remember, every little step counts. I go into much more in-depth detail in my course, The Freedom Blueprint, which covers 7 steps to financial independence. You can click on the link below in the description to check it out. So we've come to the end of this one. Don't forget to share your thoughts and comments in the section below. Until next time, take care and God bless.